Welcome, everyone, to our deep dive today. We're going to be looking closely at Friday, December 13th. What happened in the U.S. stock market that day? You sent over this report,
Right.
the closing market report from Market Deep Dive, and you really want to get the key takeaways
Yeah,
from this specific day, right?
absolutely. Yeah, there's a lot more to this Friday than I think maybe meets the eye at first glance.
Okay.
While the report itself, is a great summary, I think we can dig a little deeper into some of the nuances here,
Okay.
especially when we start to look at, how tech stocks performed
Yeah.
versus how more traditional companies did. So that's going to be an interesting contrast that we saw.
Yeah, that's definitely catching a lot of people's attention. The report highlights the Nasdaq gaining, just slightly 0.1%.
Yeah.
The S&P 500 staying pretty flat, and then the Dow Jones
Uh-huh.
down for the 7th day in a row.
Oof.
So that's its worst losing streak since 2020.
Wow.
Something's got to be shaking things up.
Yeah, there is. And it really all comes back down to inflation.
Okay.
Earlier this week, the Producer Price Index data came out,
Right.
PPI,
BPI.
and it exceeded expectations.
Yeah.
It showed a 0.4% increase. Now, this is measuring wholesale prices.
Right.
And a jump like that makes investors nervous because it might hint that inflation is going to be a little bit harder to control
Yeah.
than we originally hoped.
Especially with the Federal Reserve's meeting coming up
Right.
next week.
Exactly.
They're going to be deciding on interest rates.
Yep.
The report mentions that most people are expecting a rate cut.
Uh-huh.
Something like a 96% probability, according to the CME FedWatch tool.
Wow.
But then this inflation news throws a wrench into things.
It does. It definitely adds a layer of complexity there.
Yeah.
The Fed's role is to try to keep the economy balanced.
Right.
They use interest rates to kind of control inflation and stimulate growth.
Right.
Rate cuts can boost the stock market in the short term,
Okay.
encourage borrowing and spending.
Yeah.
But if inflation stays high,
Uh-huh.
they might have to hold steady or even raise rates.
Right.
And that could have a negative impact
Yeah.
on market performance.
So even though a lot of people were anticipating this rate cut,
Right.
this new PPI data has kind of made the Fed's decision
Yeah,
a lot harder to predict.
for sure.
What does that uncertainty mean for regular investors
Yeah.
who are just trying to understand
Right.
the impact on their own portfolios?
Well, this is where staying informed is going to be key
Okay.
because the Fed's decisions impact everything.
Okay.
If they do raise rates to try to combat inflation,
Yeah.
it affects borrowing costs for businesses and individuals,
Right.
which can slow down economic growth.
Uh-huh.
That can impact company earnings
Okay.
and ultimately stock prices.
It's like this domino effect.
Yeah, exactly.
And while the Dow is grappling with all these anxieties,
Uh-huh.
the tech sector seems to be dancing to a different tune.
Yeah.
Particularly companies like Broadcom.
Right.
Their earnings report this week sent their stocks soaring,
Yeah.
21% in a single day.
Huge.
What is behind this remarkable surge?
Well, Broadcom's CEO actually specifically attributed their success to AI,
Oh, wow.
to the burgeoning field of artificial intelligence.
Interesting.
And it's clear that investors are incredibly optimistic about AI's potential for growth over the next few years.
Yeah.
This jump in their stock price is a great example of how even in a volatile market, certain sectors and companies can thrive.
So it's like this beacon of hope
A little bit, yeah.
and a sea of red ink. But does Broadcom's success signal a new tech boom driven by AI?
Right.
Or is this an isolated incident? Is it too early to tell?
Well, it's exciting to see, individual companies making these significant gains.
Yeah.
I think we need to be cautious about drawing broad conclusions from just a single company's success.
Okay.
AI is definitely a transformative field. It has huge potential, but we have to consider the broader market trends and how different sectors are reacting to the current economic climate.
Okay.
So it's a bit of a wait-and-see approach.
Yeah, I got it.
We'll see how things play out.
Okay.
It's important to remember that market dynamics are influenced by a really complex interplay of factors.
Right.
So beyond just looking at these individual stocks, we have to consider the broader market indicators.
Okay.
And, one of those is the bond market.
Right.
That can often provide some insights into investor sentiment
Okay.
and what their economic expectations are.
Yeah. You're right. The bond market can be a really powerful indicator.
Yeah.
The report does mention some interesting movements there,
Mm-hmm.
specifically with the yield on the 10-year Treasury note,
Right?
jumping to 4.36%.
Yeah.
That seems significant.
Yeah.
Investors are essentially saying, hey,
Yeah.
we need a bigger return to make up for the potential loss
Right.
in purchasing power from inflation.
Precisely. And this actually ties into another noteworthy event that happened on Friday,
Okay.
which is the shift in the yield curve.
Okay.
So typically longer-term bonds,
Uh,
like the 10-year Treasury,
yeah.
have higher yields than shorter-term bonds
Okay.
because investors are committing their money for a longer period of time.
Right.
But on Friday, the 10-year yield climbed higher than the 3-month yield.
And this is what's called an inverted yield curve. And we haven't seen this happen since 2022.
Yeah, I remember reading about that.
Uh-huh.
And that's considered a potential warning sign, right? Like,
Right.
it could mean a recession is coming.
Yeah, it's true that an inverted yield curve has historically preceded economic slowdowns,
Right.
but it's not like a foolproof predictor.
Okay.
And there are other factors influencing the economy right now
Gotcha.
that we need to consider.
So it's a data point to watch,
Yes,
but not necessarily a reason to panic just yet.
exactly.
It seems like there's a lot of uncertainty in the market right now.
Yeah.
So were there any bright spots in the report?
Hmm.
Did anything suggest that maybe investors are feeling a little more optimistic?
Well, one potential positive sign was that gold prices dipped a little bit.
Okay.
And, gold is often seen as a safe haven asset.
Right.
So when investors are uncertain about the economy, they tend to flock to gold.
So a drop in gold prices could suggest that some investors are feeling a little less anxious.
Interesting. So like less fear-driven investment
Yeah, potentially.
in gold.
Right.
Okay. Were there any other notable movements in commodities?
Hmm.
I'm curious about how oil prices reacted,
Mm-hmm.
given all the geopolitical tensions
Right.
happening around the world.
You're right. Geopolitical events can have a major impact on oil prices.
Yeah.
And the report did note a slight uptick in crude oil prices.
Okay.
And that's likely tied to, concerns about potential supply disruptions
Yeah.
because of those ongoing tensions.
Yeah, it's a reminder that markets don't exist in a vacuum.
Exactly.
They're constantly being influenced by
Mm,
real-world events and, global interconnectedness.
for sure.
Speaking of which, did the report mention anything about how global markets were reacting to the events in the U.S.?
It did touch on that
Okay.
and noted a cautious mood in Europe
Okay.
as investors kind of wait to see what the European Central Bank is going to do about interest rates.
Got it.
They're facing similar inflationary pressures
Yeah.
as the U.S., so their actions are going to have global repercussions.
It seems like the whole world is holding its breath,
Yeah, kind of.
waiting to see what these major central banks are going to do.
Mm-hmm.
Were there any notable developments in Asian markets?
Asian markets had a relatively quiet session,
Okay.
with investors kind of absorbing the news about the potential currency devaluation in China.
Right.
And, the ongoing U.S.-China trade tensions continue to cast a shadow over global markets.
It's a mixed bag globally.
Yeah,
Uncertainty seems to be the theme.
definitely.
With all this in mind,
Yeah.
are there any specific points the report highlighted that our listeners should be paying close attention to in the coming weeks?
Absolutely. So first and foremost, the Federal Reserve meeting on December 18th.
Okay.
That's a big one.
Huge.
Their decision on interest rates is going to have a ripple effect
Right.
throughout the market. So any hints about their future plans
Uh-huh.
are going to be crucial.
Right. That meeting is definitely circled on everyone's calendar.
Yeah.
What else should we be watching for?
Well, economic data releases,
Okay.
particularly those related to retail sales
Okay.
and consumer sentiment.
Okay.
These figures are going to give us some insights into how the holiday shopping season is going. And that's a critical indicator
Right.
of the overall health of the economy.
Is a season for both holiday cheer
Right.
and economic scrutiny.
Exactly.
Anything else we should add to our watch list?
Certainly. The tech sector, with its focus on AI,
Yeah.
continues to be a fascinating area to watch.
Uh-huh.
Any new developments there could significantly impact market sentiment
Okay.
and potentially drive further growth.
Yeah, it feels like we're at a tipping point with AI,
A little bit.
both technologically and economically.
Right.
Are there any other factors or events that might influence the market's direction in the near future?
Yes. One more thing to consider. We're approaching the end of the year, which means that institutional investors are going to be rebalancing their portfolios soon.
Right.
And this can sometimes lead to heightened market activity
Uh-huh.
and potentially increased volatility.
Okay.
So it's something to be aware of.
So even amidst all this uncertainty, there's potential for opportunity.
There could be.
It sounds like staying informed and having a clear strategy are more important now than ever. We've covered a lot of ground, from inflation concerns and the Fed's interest rate decision to tech stocks versus the Dow.
Yeah,
We even explored the bond market and all those yield curve shifts.
right.
It's been quite a journey.
It really has. And
Yeah.
hopefully our listener is walking away with, a much clearer understanding of the forces
Yeah.
shaping the market right now and,
Yeah.
what to watch for.
Exactly. As we wrap up this deep dive,
Yeah.
I'm curious to hear, your overall assessment of the market's current state.
Mm-hmm.
What's the big takeaway here? What should our listener be thinking about
Yeah.
as they navigate this uncertainty?
The big theme I think that we've seen is one of transition and recalibration.
Okay.
So that initial post-election excitement has definitely faded.
Yeah.
And now investors are grappling with persistent inflation,
Right.
the potential for interest rate hikes,
Uh-huh.
and, just shifting global economic conditions.
So it sounds like the market is trying to find its footing
Yeah.
amidst all these cross currents.
That's a great way to put it. And, in times like these, it's so crucial to stay informed,
Okay.
acknowledge that there's going to be volatility,
Yeah.
and remember that the market is not monolithic.
Right.
We saw that with Broadcom and the surge in tech stocks. Opportunities for growth and innovation are still emerging,
Right.
even during times like these.
So it's not all doom and gloom.
No, not at all. In
Okay.
fact, this market uncertainty
Yeah.
might actually present some unique opportunities
Yep.
for investors who are prepared to do their research, understand their risk tolerance.
Uh-huh.
When some assets fall out of favor, others become undervalued.
Right.
The key is to, avoid making those fear-based decisions
Yeah.
and really focus on having a well-defined investment strategy.
That's a really great reminder.
Yeah,
It's easy to get caught up in the headlines and make rash decisions
right,
when the market feels volatile.
for sure.
I hope our listener feels better equipped now
Yeah.
to navigate, all these market complexities. It's been a pleasure talking with you about all this.
Likewise.
And to our listener, thank you for joining us on this deep dive.
Yeah, thanks for listening.